Hello students, welcome to Eduauraa. I am Nabanita Ghosh, your maths expert. Now, we will discuss GST in trading chain. When you purchase a television, you go to a retail shop and buy it. Do you know how it came there? It came through several steps. What are they? First is manufacturer, then through the agent it comes to the wholesaler. From the wholesaler to the retailer and from the retailer to the customer. Okay, these 4 steps. Suppose manufacturer of a watch has sold one watch for rupees 200 including profit to the wholesaler. Wholesaler sold the watch for rupees 300 to the retailer and retailer sold it to the customer for rupees 400. Rate of GST charged at every stage is 12%. Then, how each trader pays GST and takes his input tax credit at every stage of transaction. This is shown in the flowchart given here on the screen. Let's observe and study it. Here, 3 financial transactions took place till the watch from the manufacturer reaches to the customer. How the taxes are charged, collected and paid to the central government and the state government at each stage is shown here. The statement of taxes paid is given in the table thereafter. Okay, you can notice this thing carefully. So, we see the 3 tables also below. Here, all 3 financial transactions took place in one state. Therefore, 3 tax invoices were generated as follows. Each tax invoice shows the brief computation of GST. Trading between GSTIN holders is known as business to business, in short B2B. Trading between GSTIN holder and consumer is known as business to consumer, in short B2C. This is last link in the trading chain. Note that at every stage a trader has paid GST after subtracting the tax he paid at the time of purchase from the tax he collected at the time of sale. At the end, the consumer paid rupees 448 for the watch. So, the total tax paid by the traders was indirectly paid by the customer. So, GST is a type of indirect tax. In this case, the wholesaler and the retailer used their input tax as credit and got back all the GST paid by them. So, what is input tax credit? GST is levied and collected at every stage of trading from manufacturer to the consumer. When trader pays GST at the time of purchase, it is called input tax, and he collects GST at the time of sale, which is called output tax. At the time of paying GST to the government, a trader deducts the input tax from the output tax and pays the remaining tax. This deduction of input tax is called the input tax credit. So, GST payable is equal to output tax minus input tax credit. In short, while paying taxes to the government, each trader in the trading chain subtracts the tax paid at the time of purchase from the tax collected at the time of sale.